Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of DOGEcoin, ticker symbol DOGE. And so here I am recording this on the morning of Thursday, November 7th, and Doge is currently trading below 19 cents. And so I wanted to go over some levels to the downside that I think we might be testing. And also, just kind of wanted to go over bigger picture levels to the upside where I think Doge could be going to in the next, let's say, 6 months or so. And basically my thesis with Doge is that, back here in 2021, we got up to a high of around 74 cents. I think this time we could be going up to and or beyond $1 a coin. And so, I just kind of wanted to be thinking about some levels to the upside that we might be hitting that are beyond, 74 cents, going off the prior highs or above the prior highs, I should say. And also, the other part of the thesis is that, Dogecoin is just fun. So, it's a fun one to hold. And also, I should note too, I'm probably not going to edit this video because really I'm just doing this analysis for myself. And I thought I would share, just like I have been sharing these little screenshots on the channel. I had previously talked about Doge dipping to around 15 cents, which is this yellow line here. I did post a screenshot like this about that, and we did dip below 15 cents, but didn't get to 14 cents. And so with this update, I kind of gave this range 17 to 18 cent dip. And the reason why I think price could be dipping down to that level is because we have these prior highs over here. And so I gave that range because I think that it will be piercing 18 cents, but may not be piercing 17. And if it does pierce 17, then, just need to reevaluate that. But I think that we will be seeing a pullback following these highs, getting above or right around, 22 cents. I think we need to see a little bit of a cool off before we continue higher. So I wanted to go over that with you guys here in TradingView. And so this is just a free account that I have. So, you guys can do the same kind of charting if you create an account with TradingView. And so here we are looking at Dogecoin relative to USDT, which is Tether or, $1. It's a stable coin. And this is the daily candle chart, as you can see there. And this is also looking at Dogecoin relative to the data or from the data that's on Binance. If you look at the data from Coinbase, doesn't go back as far in time. And I wanted to be looking at these lows that we saw, at the end of 2020 before we saw these big moves to the upside, because I wanted to do a Fibonacci extension that could give an idea of levels to the upside. And so I'm just going to walk you guys through that and kind of talk through my process because, it's helpful for me. And so hopefully it's helpful for you. And so I'm going to go over here to the tools here. Typically, I just use Fibonacci retracements. I do have that favorited here, but I wanted to do the trend-based Fibonacci extension going from the lows over here to the highs. But if you notice, it's kind of hard to tell, where's the lows over here? It just seems like a flat line. So what I'm actually going to do is right-click on the y-axis. You can see that it is the regular or linear scale. I'm actually going to switch that to the logarithmic scale because it makes seeing the bottom there a little bit easier to identify. And so, that will be helpful for drawing this Fibonacci extension. And actually, because I am also, wanting to think about this on a longer time scale, not just, trades over the course of a week or so, but really thinking about like the next 6 months where I think Doge could be going, I'm actually going to switch this from the 1-day candles to the weekly candles, just because we don't need to be paying attention to all of that noise, just going from the highs, the lows, and just want to have a clean picture of that. So this is the weekly, as you can see, going to go back over to that Fibonacci trend-based extension tool over here. And just approximately, I could do it to the penny or fraction of a penny, but for purposes of this video and these just being kind of approximate levels, I am just going to do it approximately. And so we can see this low here. It looks like it was the low hit in March of 2020, which was at a price of 0.113 cents. And so actually, I can line that up pretty close. So I actually have that lined up at 0.113 cents there. I'm going to take that, draw it up to the high that we hit, which was in May of 2021, and that high was 73.995 cents. So let's see if I can get that lined up almost right. This is pretty close, almost there. It's a couple fractions of a penny off, and then from that, after clicking, I'm going to drag to the low that we hit over here, which was, let's see, on or for the month of June 2022. And rather than connecting it to the exact low there, which was, let's see, 4.914 cents, I am just going to drag this all the way over here. So we have, those levels to really be getting a nice view of for the current price action. Again, just being proximate, I'm going to connect it there. And even though it's not exact, it's not perfect, I'm just going to lock it in place so we don't accidentally move it. I'm going to remove that ad. Like I said, this is, the free trading view. And so from that, we can now get an idea of some levels to the upside if I do adjust that y-axis. And so what we can see here is the 100% extension level, that goes up here, the one that you can see right there, that corresponds with, let's see, $31, right around $30. So that's pretty crazy. I don't necessarily think prices, I definitely don't think prices going up to $30 in the next 6 months, but we can look at some of these levels that are perhaps a little bit more, reasonable or feasible, I guess I should say. And so one of those, of course, is going to be getting to, that all-time high at right around 74 cents. And just below that, we have the 382 at 58.5 cents. And so maybe we bump into a little bit of resistance there. But, speaking of resistance, perhaps I should also talk about the 236 here, which is right around 22.75 cents. And we did, get rejected from that level over here. So in March of this year, we hit a high of 22.888 cents. So we did get rejected from that 236 level. So I find that to be really interesting. I think that is pretty telling, that Fibonacci's are pretty useful here. And then so that next level up, if we are to, make that next leg up, that would be, like I said, at 58.5 cents. That is the 382 being just below the all-time highs. So maybe we bump into a little bit of a resistance there. But then we can also see the 50% retracement, or I should say extension, that is at right around $1.25. Also, that just being, $1 and then a quarter. So it makes kind of sense there. I also think that $1 will be some resistance. I think really like the psychology is probably going to be that people like me with that thesis of, I think it's going to go to $1 this cycle. There will probably be some resistance there because people will sell. But then if it does pull back some and then break through $1, I think those same people will then FOMO back in because, the markets are really designed to get people to be buying at all-time highs. That's what makes them all-time highs. That's what pushes them to new all-time highs is people start to FOMO in. They don't want to be missing out. So even if people do sell at $1, maybe $1.25, we get into some resistance there. Maybe we continue higher. Those people FOMO back in. And so the 618, that is at a very fun price, $2.69. So, I could see price going there. And then the 786 is right around $8. Another level that I've seen that I just think would be fun for Doge to get to, that would be right around, $4.20. Because we like to have fun with these numbers, or maybe $4.20.69 for $4.20 and 69, fraction. You get it. So I could definitely see that happening. But with all of these levels here, it's kind of just like throwing a dart at a dartboard. I don't really know which one it's going to be going to, but I definitely think price could be getting up to and going beyond $1 a share, maybe $2.69 or $2.50. That seems like a pretty reasonable target. I think 8 is getting a little excessive, and definitely I think that 30 is getting excessive, up here to that 100%. And so, with that being said, so I do have this on the logarithmic scale. I also did want to point out, I forgot to mention this, that clicking on the line here, that trend line, if I do go into the nuts and bolts of it, the settings, we can also see that I do have the fib levels based on the log scale. To get another kind of perspective, I can adjust this to now being on the linear scale. And so that maybe gives us some more levels, kind of fine tuning it to get an idea of where price could be going. And since we're looking at this, kind of with it scrunched on the log scale, I am also going to be switching the y-axis back from logarithmic to regular and or linear as it is. And so now we can see it here. And then I'm just going to double click the y-axis to bring it all into frame. And so we can see here some levels that we might be seeing that, get us in that range up to that all-time high. And as you can see, the 236 on the linear scale, just like on the log scale, there is some resistance right around 22 cents. We did bump into it there. It does look like we're putting in a double top. So maybe we pull back to, like I said, pulling back to right around 15 cents with the highs here. We might be pulling back now to between 17 and 18 cents with the highs over here. So we got that little bit of consolidation there, that shelf. That could be acting as support if we do pull back, and then we see the next move higher. So that next move higher, if we do break above 22 cents, we've got the 382 here at around 33 cents. So we can also see that that does correspond with some prior highs. So it might be acting as resistance again, as we do have the high, a wick high for the week that ended on the 25th of October, 2021. We have a high for that week of 34 cents. And then also with these 2 weeks here in August of 2021, those did get up to right around, let's see, 34 to about 35 cents. So maybe see some resistance around there. Next level up, 40, 42 cents, somewhere around there is the 50% retracement, or I should say extension here. And we do have some wicks, as we can see if I do zoom in correctly here. We do have some wicks over here that did get up to that level, got into some resistance. Also, I think 50 cents, that just being, like 2/4 or a $0.50, we do think like that. So that could be some resistance. And, with that being said, 50 cents right here, that is the 618. And so that could definitely be some resistance. Moving up and beyond that, 63 cents here is the 786. And then, of course, that all-time high here. But what we want to look at really is, the new all-time highs that we could be hitting. And so thinking about that, I do have this all-time high here off a little bit. So I might actually adjust that to, let's see, 73.995 cents. So the way that I adjust that is I click the line there, go to the settings, and then I can go to coordinates here, click that, and then go to the second point here, 73.995 cents. And that was actually lined up pretty nicely before. It's just that what we see, because this is a Fibonacci extension, not a retracement, that 100% is actually higher than the prior all-time highs. And I think kind of a good lesson with that is if we do see price start to stop around 78 cents, here the 100% retracement or extension, I should say, is at 78.822 cents. Again, that is approximate, as the way that I did draw this was not precise to the bottom that we saw over here. But if we do see our price action break the prior highs but not really be able to do it with strength, we do start to show some weakness around 78, maybe 80 cents. That could be suggesting that we are putting in, a higher high. Maybe we see some bearish divergence with that. If the RSI is a lower high, I can go over that later if it does start to seem like we are getting rejected from around 78 to 80 cents. That could be the new top, and we start to pull back, move into a new bear market. So do be cautious of that if we start to break above 74 cents. But moving beyond, let's go up to the 1618 extension. That is, again, right around $1.25. So, I think that is a good sign that if we do hit $1, we very we very likely may be going beyond to $1.25. So, if the thesis is to sell at $1, just have a plan for if it does go beyond $1 to not then FOMO in. So only take, a portion off the table at $1 that would be leaving in, what one would be happy to be continuing to hold. So that's something that I'm trying to navigate. I'm currently building up the Doge position that I want to have. And, but then once it gets above $1, I want to take enough off the table that, I am not risking, really too much. I'm playing with house money at that point. And so that's kind of my strategy, because I could see this going up higher, like to $2 a share, which is the 2618 here. And that also being, psychological level, a lucky $2 bill getting up to there. I'd like to see that actually, the Dogecoin taken over not just the not the $1 bill, but the $2 bill. And I think that would be a good sign for all of us. But then continuing on, we can see these other levels here. We've got the 3618 at a price of right around $2.72. And then the 4236, that is at a price of just over $3 a coin, that being at $3 and about 18 cents. So maybe we see Doge getting up to above $3 a coin in the new year, perhaps in January, perhaps in February. I really have no idea, but I do think that the things have changed a little bit recently, and I think that we are going to be seeing a rally into the new year like we've seen, in prior cycles following halvings of Bitcoin. That relates to the crypto market. And yeah, so I think that if we do see a pullback to, let's see, 18 to 17 cents, I think that's going to be a dip buying opportunity, but I think it's also good to have a plan for if it does pull back a little bit lower. But if it does pull back to those levels, I mean, for me, for my thesis of this going to $1 and beyond, I think those are just going to be dip buying opportunities. So I'm really excited about what's going on with Doge, but I am trying to plan when I do add more aggressively. I am trying to plan on those being at dip buy levels, like at 15 cents here, like at 18 cents here, because I do think we will be seeing those pullbacks. I do think they will be respected as support, and I do think that we will be breaking the 74-cent all-time high at some point in 2025, but we will just have to wait and see. And as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And let me know if you want more Doge coverage. Take care, you guys.